Okay, I think we will go ahead and kick it off. So I'm Wes Lambert, CEO of Restaurant and Catering Australia. And to kick things off, I would like to acknowledge that this meeting is being held on any of the traditional lands where you may be enjoying this meeting. And we would like to acknowledge the traditional lands of the people, of the Aboriginal people, and we pay respects to their elders, both past, present, and future. So I'm going to hand over to Hugo to give a bit of an introduction to the participants in today's webinar and panel, and then over to you, Hugo.
Thank you very much. Hello, everybody. My name is Hugo Robinson, and I'm the Manager of Policy and Government at Restaurant and Catering Australia. Obviously, you just heard Wes Lambert, our CEO. We're also joined by two absolute experts in the field, Mr. Colin Samuel from Prosperity, who's the Director of Business Services and Taxation, and Paula Tallon, who is the Director of Taxation Services. And I think Colin and Paula, whereabouts are you guys calling in from? Obviously, you've got Parliament behind your back.
We're
there.
calling in from Sydney,
West
Sydney.
That's right. Well, there was actually a protest in front of Parliament this afternoon, so I'll be very surprised if you're calling in from there. And obviously, Wes and I are in Canberra. I have a filter on in the back, so I'm not actually in a swanky 50-story building. But I'll hand over back to Wes to kick us off to start our budget webinar, to sort of give us an overview of the budget and to give us a state of the industry.
Thanks, Hugo. Thanks, Colin, and thanks, Paula, for joining us on the panel. And again, thank you to all of the individuals and participants who are watching us. So I'm going to do a quick State of the Nation. According to the ABS, results were released yesterday that February 2022 over February 2021 for restaurants and cafes and takeaway, we're actually up 15%. So we don't have demand issues on our industry. All of you will notice that our number one problem is the workforce shortage. And this continues to be a problem, followed by cost of goods, followed by rents, and certainly not far behind that wages. So it's really a numbers game. It's the main problems in our industry are numbers, and that's pretty much around the country. Certainly restaurant and catering continues to have wins. We got an outdoor dining win that Hugo's just sent to me just a few minutes ago in Melbourne. And certainly around the country, we continue to advocate hard for the hospitality industry. And while the workforce shortage is critical, we certainly are not seeing a demand issue. The only problem is the budget last night did not address the workforce shortage. We were quite disappointed that the government did not listen to the entire accommodation and food service industry as to its number one problem. And we're not the only industry with a workforce shortage. We just have the largest workforce shortage, over 95,000 people today. And certainly if you don't believe that number, someone had questioned me earlier today in Parliament House, and I said, well, there's 100,000 restaurants, cafes, caterers, pubs, clubs, hotels, and takeaway services businesses in the country. You don't think that they all need at least one person? And they sort of said, oh, well, now it makes sense. So our industry, above construction, above all other industries, has the biggest workforce shortage. And we had expected that the federal government was going to insert some funding for the Department of Homeland Security and for the Department of Immigration to process visa applications faster, and that wasn't there. We thought that they were going to mention the workforce shortage and put some mid and long-term funding in place to ensure that those positions can get filled. And certainly we've had lots of discussions today on the back of that, on the back of the budget, to come up with some further solutions for election promises. We also had expected that there was going to be potentially some alcohol excise changes or potentially some FBT changes also that were not announced at all in the budget. So no short-term or mid-term easing of any kind for our industry, as well as no changes to IR, no mention of anything related to the Restaurant Award or the Fair Work Act, which certainly didn't come as a surprise. But ultimately, what we didn't hear in the federal budget was anything related to base industries like retail, like hospitality, like tourism, like aged care, in terms of ensuring that those businesses can get a much fuller workforce, which we know can't be fully created through VET and TAFE and RTOs because it takes time to do that. It takes years to home grow those 100,000 people. It can't just be done overnight. So certainly a bit of a disappointment. However, we are happy that they kept the boosting apprenticeship commencement or boosting apprentices funds and wage subsidies until 30 June. And we're going to continue to press to ensure that those go beyond 30 June, at least for targeted industries like hospitality, because it's very important that that our industry, which while it has had an increase in commencements, it is nowhere near other industries like cyber and construction, 3% and 4% up years. We're just 35% up from previous years. And our completion rate continues to be negative. So certainly it has dropped versus previous years. So just throwing money at traineeships and apprenticeships doesn't entirely solve the problem. We're certainly going to need to change the culture of hospitality, and we are at the forefront of doing that. So certainly there's a lot of consumer and cash splash to deal with the short-term pain in cost of living, but that's cost of living from a consumer point of view. We certainly didn't see eye to eye on the training write-offs, which I'm sure that Paula and Colin are going to speak about as that is a taxation issue. Certainly, if you have to spend money to make money, small business right now, and especially hospitality businesses, just don't have the money to spend. So that is my summary of the budget. It certainly was a mixed bag. Our main quote was, it was long on the short, but short on the long. Over to you, Hugo.
Yeah, thanks, Wes. And I guess just following up from that, I mean, I think the real disappointment that we had is sort of, I mean, across the board, I think most of hospitality, including us, the clubs and the pubs, was sort of really keen for more to be done in terms of migration. And as Wes alluded to, sort of the push that we were looking for was to try and get these visas and the visa issue that we currently have in this country sort of brought along quicker, and sort of more funding and more money going into processing these visas quicker. I think that is a pretty big, it's a pretty easy thing to do. It's not a big ask for us. And I think that, the fact that they didn't increase the migration cap really shows that, we do have a long way to come in terms of getting federal governments to actually address this issue properly. And as Wes alluded to, I mean, the investment in jobs and investment in training and apprenticeships, I mean, 2.8 billion to support apprenticeships and 7.8 billion, which is a record of announcement of investment into generational skilling, is important. But I think as many of us would know on the call, as business operators, it's actually getting those people to do those training courses in the first place, which is the real tough part. I mean, I think, we've spoken to federal government and state governments across the continent discussing how we need to get more Aussies into doing these trainings to begin with, and to get into people from overseas to come into the country to do the training. But that's the hardest part. And you can throw as much money as you want at it, but really the fundamental systemic issues that we face is actually just having the people to begin with, as Wes alluded to. And, 95,000 job listings on online job ads companies is a pretty frightening figure. And it's something that we made very clear to the federal government is really crippling the industry as a whole. But I think the biggest disappointment for many of us in the hospitality industry comes down to, firstly, obviously supporting workers from overseas, which is a bit of a letdown. But I think also just alcohol excise across the board. I think that there could have been a lot more done in making it easier for venues to buy alcohol from suppliers, and the lack of an alcohol excise across all alcohol types, including beer, wine, and spirits, really doesn't address the current cost of goods issue that we're facing in this country. And I think that ultimately the government, needs to either front up on this kind of issue and actually tackle not only cost of living for the regular punter and the regular elector, but actually for businesses as well. Obviously we saw the one-off cost of living tax offset that they announced, which was sort of the flagship of this budget, which was a one-off $420 cost of living tax offset for over 10 million Australians, which was sort of designed to sort of tackle rising costs of goods, due to global headwinds, whether it be the war in Ukraine, whether it be sort of, supply chain sort of suffering due to COVID that we've experienced for 2 years. We really would have liked to see some more offsetting for businesses as well. But look, there's a few things in there for small business. I mean, they've sort of indicated that they want over $21 billion in tax relief for small businesses, $10.4 million to enhance and redesign the payment times reporting portal and register, which should make it a bit easier for larger companies, but not really much for small business there. And a bit more to do with small businesses dealing with the Fair Work Commission. There's $5.6 million dedicated for the Fair Work Commission to work with small business to meet workplace obligations, which will sort of help out in terms of, working with sort of oversights and sort of compliance issues that small businesses might have, and sort of get to those issues quickly before there's some sort of malpractice found by the Fair Work Commission, which is pretty good. There's some support for small business mental health, and obviously $2.1 million for financial counselling for small businesses who are facing debt, which is, I think, very important that they keep backing that. Obviously, $2.1 million is probably a bit low in terms of that. I think the other thing that I just want to say is, there's sort of an addition to the, working holiday makers cap, which is pretty good. But as Wes said, it doesn't really go to the core of fixing exactly what we need them to fix. And I think that my sort of issue with the one-off cost of living payment is that, it puts money in people's pockets, and hopefully that encourages them to sort of spend local at their local restaurant, cafe. But, to make Australia competitive, I think we sort of need to get to a point where now we're encouraging people to go back into work and encouraging people to take up, well-paying and well-rewarding hospitality jobs. So I really think that, look, whilst the budget is sort of a very much an election budget and will sort of be used by the Morrison government to sort of run the next few months in terms of the election coming up. I think in terms of what small business has across the board, not just restaurant cafes, but also pubs, clubs, the retail sector, what we've asked for sort of has been overlooked during this budget. And it is rather disappointing in many respects. And we've put out a fact sheet that sort of goes through every single thing that pertains to our industry. And I can share that, and you would have gotten that through your EDM last night that we sent out. But if you need the fact sheet, please feel free to message me. I'll put my email in the chat. But that should give you a better sort of overview about what's available for businesses going forward. So I'd like to probably hand over now to Colin to sort of give his assessment, and after that we'll go to Paula. So Colin, I'll just hand over to you if that's okay. Or Paula, did you want to go first?
I think I was going to kick off with some of what was on our predictions and wish lists here at Prosperity. If that's
Sorry
all
about
right.
that, yeah.
As tax people, we always put together these wish lists before a budget as kind of things that we would like, but also the things we predict would be easy wins. So we had predicted the extension of the low and middle income tax offset, the continuation of small business CGT concessions. So that's really important for business owners. And it's one of those areas which there's a constant threat of those being undermined. So for those of you who are business owners and are hoping to sell out, those reliefs have been preserved. So there is the opportunity to sell out with the tax-free gain. Of course, you need to get those values up there first. And the general additional funding to the ATO. I think the ATO were the winners of the federal budget because they certainly got a lot of funding last night, an additional 2 years of funding. On our wish list, we did have CGT reform. I think we're desperately in need of some CGT reform to encourage proper investment into assets, because at the moment there's distortions in the tax system as to how long assets should be held. And I think I want to see more around more permanent investment allowances, because we have a lot of temporary things in our tax system. It would be good to have some permanent measures to enable businesses to plan with certainty in relation to their capital expenditure. So that was what was on there on my wish list. I'll hand over to Colin now for his.
Thanks, Paula. So yeah, I mean, as everyone said, it was a pretty mixed bag of a budget. It was, I guess, really, I guess what I'd call it is a voter's budget as opposed to a business budget. So it's obviously targeted at the election, but targeted at the individuals as opposed to the businesses, which was disappointing. Obviously, one of the key things was the fuel excise duty that they've halved, and looking at the petrol stations near us, they've already put that in place. I guess on the flip side, it's only going to be in place for the next 6 months. So obviously that gets the government past the election, but it'd be interesting, whoever's going to be in power in 6 months' time, when fuel prices go up by 22 cents or maybe even a bit more. They're not going to be, once you take things away, people forget about the fact that they were there to start with. So it could be an interesting political event in 6 months' time. One of the other main things that came out of the budget last night was the technology investment boost. So that's for businesses that have less than $50 million in aggregated turnover, which will be the bulk of the people on this webinar, I would have thought. So it gives you an extra 20% deduction on the expenses and capital items in relation to the digital adoption. So whether that be devices, cybersecurity, subscriptions to cloud-based services, which a lot of businesses have, they'll put a cap on that of $100,000. It applies from budget night, and however, money that the businesses spend in this financial year actually can't be the extra 20%. You get the deduction in the 2023 financial year. So that, obviously they're deferring the cost to the budget and for another year. There are other non-tax measures. So the government put more money into their modernising manufacturing fund. So I guess for those of you who are whose businesses are vertically integrated and do manufacturing, they'll put more money towards that. But for anybody who has applied, and we've helped clients apply a couple of times, it's not the most easiest grant to apply for. The other changes that they had some paid parental leave changes that supposedly simplified it and made it better for the worker. But whether that's going to be better for the employer, well, I guess it's a watch this space. And then on the admin side, it was they talked about pre-filling the payroll tax returns with wage information from the single touch payroll system. So, the Fed talking to the states. Paula, do you want to go through a few more of the tax side of things?
Certainly. Thanks, Colin. It was interesting this morning. I think I could count the tax measures on my two hands, and that was at a stretch. I got to about 8 items that were relevant. And interesting in relation to that technology boost for 120%, if you work out the maths on that, because I'm a bit of a maths nerd as well, but if you work out the maths on that, that's going to be worth 5,000 a year, and it's going to run for 2 years. So what's that? 10,000 to businesses. And in our discussion before the webinar started, I think it was Wes pointed out, well, you got to spend money to get money. And even then you have to wait for the super deduction. So not a huge incentive there. So there were these are temporary and targeted cost of living packages. So there's the tax offset, which we mentioned already, which is the $420. This is a one-off thing. And remember, this offset is going to be phased out after the 30th of June, 2022 anyway. So how do you access this? Well, you need to lodge your tax return as soon as possible after the end of the financial year, because that's the only way you're going to get your hands on this money. So again, that puts a bit of pressure on people trying to get their income tax returns lodged on time in order to get their hands on their funds. And I'd say just be careful in rushing to lodge your returns, because it's very easy to miss out on some valuable income tax deductions in your rush to try and get your hands on that $420. So I'd just say, you know, tread carefully if you're running to get it. And we've got the one-off economic support payment of $250, which is going to be made in April, so day after tomorrow. And these payments are going to be exempt from tax, and they're not going to count towards income support. So they're typically going to go to pensioners or anyone on welfare. So, you know, two sort of, I would say, two sweeteners there for voters that are going to appeal to some people. The next thing is in relation to the deductibility of COVID-19 tests. And I suppose this always makes me have a bit of a chuckle, because surely this is something we shouldn't need all this specific legislation for, because this is a necessity in the current state of times. But if you're providing your employees with COVID tests, well, thankfully, you won't have a fringe benefit tax on that. And for your employees who have to pay for their own expenses, they will be allowed to take a deduction for those in their income tax return. And that's where I'm saying, you know, don't rush to get those returns lodged, because you may have other expenses to put through. Now, those announcements were made in February, and they are backdated to the 1st of July, 2021. Well, show me any taxpayer who's been keeping all those expenses when they've been going out and buying those RAT tests and getting those tests done. So it's going to be interesting to see how people pull together the substantiation to prove that they've actually paid for those tests, but certainly a step in the right direction. The thing that I did welcome last night was the extension of the patent box, because while you may think of the patent box as being something for large entities, actually it's something that is very relevant in relation to the hospitality sector. And the expansion to the agricultural sector is good news, because it can help with those innovations where you have technological advances. And the whole idea behind it, you know, it's great having all these wonderful ideas where people come up with these great things that we can do, but it's actually the commercialization of them that's very difficult. And it's like, we all know these really bright people who can come up with ideas, but they need someone to help them take it to the next step. And I suppose what the patent box is, it's quite an incentive to do that. And the patent box was announced in the last federal budget, but it is being extended now into the agricultural and the low emissions sectors. Now, for those of you who are sitting here and gazing over and thinking, well, what the hell is the patent box and what's she talking about? And why is it any good to me? Well, it does reduce the effective tax rate down to 17%. Now I hear you. Everyone's perking up. 17% instead of 25% is always a good rate. And if you're paying tax at 30%, then 17% is even better. So the whole idea is you have a registered patent, and any profits or gains that are arising out of that patent are essentially boxed together, hence the patent box. And all those profits are taxed at the reduced rate of 17%. So it is quite valuable. So if it is something that can apply in relation to the supply chain and everything else, it is something which is quite good. The downside is it requires an irrevocable election. Now, anything that tells me it's irrevocable, I automatically go cautiously, because if you tell me I can't undo something, then I'm automatically looking, what's the trap if I get caught in there and I can't get back out? So it is something you do need to think carefully about. It is very much aimed at Australian businesses. So it's only available to Australian taxpayers. It's only available for patents where R&D has been carried out in Australia by Australian companies or entities who are resident in Australia. So that's good news that there is this focus on these Australian businesses. And you do need a registered patent. It doesn't need to necessarily be registered in Australia. It can be registered in the US, or it can be registered in Europe. So please don't dismiss the patent box as being something for larger companies. It does have relevance to this sector and should be looked at. In following on from the technology boost, we have the small business skills and training boosts. And yes, yet again, another enhanced deduction of 120%. So for any funds that are spent in upskilling your staff, then you should be able to get 120% tax relief. Now, just remember, you're always getting 100% anyway. So you're getting an additional 20%. You're not getting 220% unless I've read the budget documents wrong, me and the rest of the Australia. But there is no limit on this. So we saw with the technology one, there was a limit of 100,000. There is no limit on this one. But again, as Colin pointed out, if you have got expenses between now and the end of the financial year, you won't be able to get that extra 20% until the following financial year. And this one does run for an additional year over the technology one. So the technology boost runs until 2023. This boost will run until 2024. Employee share schemes, we're always delighted to see things on employee share schemes. And there may be those of you who are listening who have got employees who have equity in your business, and you can see the value of employees having equity in the business. However, for startups and small businesses, it can be very difficult, and there's a lot of red tape in getting these shares to employees. So there's going to be some relaxation on those rules, which will make it easier for startups in Australia to compete. So that's going to be relevant to any, I suppose, people expanding into Australia and wanting to bring in people into employees into their businesses, and those limits are being increased. We don't have much detail on that at the moment. All we have is what's on the screen there, but they'll be able to be invited to invest up to 30,000 a year, no matter what the value of the shares that they're giving. Of course, there's a whole myriad of tax issues that go with that, because you can't just give an employee something for nothing and not expect a tax charge. And one of the deterrents in giving equity to employees is the fact that these employees get hit with what we call a dry tax charge. So they get these shares in the business, they think they're doing really well, and then they get hit with a large tax bill and they have no cash to pay the bill. So it's hoping there's something good in there around the tax reliefs, but as I say, we haven't got the full detail on that yet. There's been an extension of the temporary reduction in superannuation minimum drawdown rate, so that may be relevant to some of you. And this whole measure is just extending that 50% reduction for an additional year to the 30th of June 2023, and it's just helping retirees so they don't have to sell off assets in order to satisfy those minimum drawdown requirements. There's some modernization in relation to the pay-as-you-go installments. So the idea is that companies will be able to choose your pay-as-you-go installments based on your current real performance. And these systems, hopefully they'll be in place by the 31st December 2023, so the measure can commence on the 1st of January 2024. But of course, if you have a good accountant, you're probably already doing that anyway, because you are monitoring your payments in real time and you are making sure that you're not overpaying your installments if you don't need to. And there's the proposal to set the GDP uplift factor for the installment payments to 2% instead of the statutory 10%. They are proposals, they need some enabling legislation. So it'll be interesting to see whether or not they help, given that they're unlikely to go through this side of an election. So the last measure I want to finish off with was tax integrity. And I said at the beginning, the winners of the budget were the ATO. So the ATO got additional funding, 325 million for 23-24 and 328 million for 24-25. And this is to extend the operation of the tax avoidance task force by 2 years to the 30th of June 2025. So if you recall, that task force was established to undertake compliance activities which were targeting what the ATO were looking at were high risk areas where there was tax leakage, in particular private groups, trusts and high wealth individual. Now, if you have a family trust, you can't but be aware of everything that's been going on in relation to what they call Section 100A. To you, me and everyone else, it's got to be the attack on family trusts where you have distributions to adult beneficiaries or some other beneficiaries with a favourable tax rate. So that came out in February 23. We were hoping February 23rd. We were hoping to see something on that in the budget documents. There was nothing. There have been some murmurings across Twitter and LinkedIn today about retrospectivity and whether or not anything will be done around that. But it's just be aware, if you've got a family trust, you do need to be looking at your arrangements and making sure that they are in line with ATO current thinking, and also to be thinking about whether or not, I suppose, have you got any exposure for the past years. So that's everything I have on the tax. As I say, it wasn't a very exciting tax budget. So I'll hand back to you, Wes.
Okay, thank you so much, Colin and Paula, for that very comprehensive summary of the tax implications of this budget. And certainly, as you said, there are winners and losers in this budget. And then there's just, industries that are left out altogether. And for the most part, the accommodation, food service industry, our segment, restaurants, cafes, and caterers, really all the segments, the pubs, clubs, hotels, everyone was really left out. So we weren't winners or losers. We were just left out of this budget, which is typical of an election budget. We do expect that there will be election promises from both sides, both Liberal and Labor, as to potential changes to many of the things that we advocate for. They just didn't make it in the budget, which was a cash splash to consumers due to the recent increases in the cost of pretty much everything, with CPI reaching potentially record levels. So we're going to open it up for Q&A. If you have any questions, certainly it's a lot of information. And certainly there's been a lot of commentary on every news channel, on every radio station, and every newspaper. So you may have had your questions answered. But certainly if you have any questions to pop in the Q&A, we are happy to answer them. But if you don't have any questions, it means we've explained it pretty well. Certainly that seems to be the case, that we have explained the budget to the attendees today so well that no one has a question. Well, it looks like there are no questions. So there's no reason for us to keep you here waiting for questions to come on. So I'm going to hand over to Hugo to wind up this webinar. We very much thank you for coming on to the Restaurant and Catering 22 federal budget briefing and explanation. And certainly, if you need the fact sheet, please email Hugo. I'd like to thank everyone on the back end, Kieran and Belinda, who without their help and support, we could not make these webinars happen. And so over to you, Hugo.
Yes, thank you, Wes, and a big thank you to Colin and Paula. Guys, that was an absolute mammoth effort in explaining all of that. So thank you so much. And I'm actually quite blown away of how comprehensive and easy to understand that was. So I think that's something that our members, both on this stream and in the subsequent recording that we send out, will greatly benefit from. And, I just want to reiterate that, whilst there is some stuff that we have missed out on, there's a whole bunch of stuff in upskilling and training, especially around the digital side, where, you can just have that little bit of easier cost of living for your business to run. And I think that will help, should that be delivered once the budget goes to Parliament very soon. So thank you very much, everybody, for tuning in. Hopefully you found this to be valuable, and I can't wait to see you guys on the next webinar. Thank you very much.